Hey everyone, welcome to the short and long of it. My name is Scotty, and this channel is all about my journey in options trading. Come along for the ride as I attempt to buy and sell options in my pursuit of financial freedom. I'll be sharing my strategies, wins, losses, and lessons learned along the way. In today's video, we're going to be breaking down Nvda, or stock ticker NVDA. As you guys know, it's one of the hottest stocks in the market right now. I'm going to be breaking down its financials. I'm going to be analyzing the technicals of the stock, as well as walking you through how I'm building my own position in Nvidia through cash secure puts. So we're going to go ahead and jump right into Nvidia's financials. Here we have Yahoo Finance, who does a great job of aggregating all of any given stock ticker's financial reports and earning reports. I typically just only use the annual reports as I'm more of a long-term investor. I then translate all the pertinent information for any given stock's earnings to my Excel spreadsheet. I have multiple companies here, but as you can only see, it's Nvidia. We don't stay focused on that today. Going through Nvidia's earnings annually, as you can see, their revenue has just increased 126% from last year and has been increasing since 2021 at a minimum. Their net income has also increased, especially from 2023 to 2024 at 49%, which is important because not only do you want the company to make all this revenue, but how much are they actually keeping? And that's what the net profit is showing you here. They're keeping 49% of the overall revenue, and then going into their cash position, which I think is critical for any company. The cash is what helps the company not only invest and do R&D, but also stay afloat in these uncertain economic times. Look at 2022, 2020, 2008, 2012, 2011 time frame. If the companies don't have cash, they're hemorrhaging money, right? So they're not going to be around for long. Nvidia is showing a strong cash position here, as well as a growth in cash from operating activities, a whole 400% from last year alone. And then also they're able to invest some of their cash into these R&Ds. You see these negative numbers, which is money going out, which is good for investing and financing. So in financing, they're paying off these loans. Investing, they're investing in new projects in R&D. Now that we've broken down the financials of Nvidia, we're going to go ahead and jump into the technical analysis. The technical analysis that I'm using for Nvidia, I typically use Bollinger Bands, as well as the 20-day, the 50-day moving average, and the 200-day moving average, as well as the RSI that you can see here at the bottom of the screen. To kind of go with explain the Bollinger Bands, it's essentially a two-step standard deviation away from the mean. That is a visual representation of the overall stock movement, the highs and lows. Typically, the stock will try to remain within those Bollinger Bands as an average. And when they hit those bottom and tops, they typically will go to the other side uh, on average, but you have your earnings and stuff that will send it sometimes outside the Bollinger Band. But as you can see over the past 6 months, anytime it's kind of exited these Bollinger Bands, they've returned more towards the mean of the band itself. And then here, obviously. So it gives me a good idea on what's a good price to buy a certain stock at, given its financials are positive. So with Nvidia, as I've touched on, the financials are great. So I'm looking for a entry point here. The 200 moving day average for me is critical support, and also comparing that to the RSI. If it's over 70, it typically means it's overbought, and the closer it gets to the 30 area means it's oversold, typically on average. So I kind of try to line up those two key points along with the Bollinger Bands and these areas of support, and then I try to go ahead and find a good spot to enter the stock via a cash secure put. So a cash secure put is simply just an options trading strategy where an investor is selling a put option while setting aside enough cash to buy the stock if it's signed. So for this example, Nvidia, if you want to sell a cash secure put at 115 like I did, you would have to have $11,500 in your account. How selling an option works is you're just going to go ahead and sell a put contract via the option chain. You're going to have that cash set aside, and you're going to collect premium. That's the advantage of it. So if a put option that you're selling is worth $400 or $4 per contract, you will be given that premium upfront, which is yours no matter what happens to the contract itself. If the stock stays above that strike price, the put option will expire worthless, and you will keep the premium as profit. If the stock drops below the strike price at the end of expiration, you'll most likely be assigned the shares at that strike price. But since you set aside the cash, you're provided to buy them at a discount compared to when you sold the put. If the stock is slightly above or slightly below when it gets to your expiration, and you don't necessarily want to be assigned those shares, you can roll that option out to the next month. I typically do 45 days for expiration for cash secure puts. But in this instance, I'm okay with being assigned because Nvidia is a stock that I do want to own. So following my technical analysis, my financial analysis, I decided I wanted to go ahead and buy Nvidia at 115 in this area right here, just below the 200 moving average. A little risky choice here, only because when a stock loses that 200 moving average, it's kind of in free fall mode. But I felt like it was a panic sell of the market with the tariffs, with DeepSeek and everything like that. So combining that with technical analysis and just the fundamentals and financial statements of Nvidia, I definitely felt like Nvidia was on a discount. So I felt comfortable with owning the shares at 115. So now that I've identified this price based off of, the Bollinger Band is a good area and the RSI as well, I went ahead and purchased or sold a put option on the 29th of January. It's always good to sell these put options on red days. You get more premium because the market is reacting in a downward fashion. So the premium for those options are going to go up when you're selling these when you're selling these underlyings. So what you do is just come over here to the trade portion of the Thinkorswim, and I picked the 28th February 2025. At the time, it was about 30 days out. I selected the 115 strike price and sold it at the time at $4.10 a contract, but it represents 100 shares, so it's $410 that I received immediately, and just kind of let it ride. Um, I typically, when choosing these options, I'll look at the delta. I want to get around like a 0.20, 0.21 or lower. However, I chose a higher in the money option, or closer to the money option. It's probably at the time probably like a 0.35, but looking at the stock itself, you can see after the 29th, it obviously came down, but it's back up to 129 now. So now a good $14 out of the money for our position here. So I'll just let that position ride. It's now worth $2.55 to $2.61. So you can actually still enter this trade on Monday morning if you really wanted to, and get that premium. It's at a good delta at 0.20. So it's still a good delta and actually less risky, right? If you actually didn't want to get assigned the shares. However, I always run cash secure puts on stocks that I would not mind owning, based off of the financial and the technical analysis that I have ran on the stock. So I'll let this ride, and if the stock does close at 115 or lower on the 28th of February, totally fine. I'll own 100 shares of Nvidia at 115, which I definitely think is a steep discount. But if not, if I'm not assigned and it remains 116 and above and goes to 130, I'll look to write another put option against Nvidia and just repeat the cycle and do this monthly. And you can do this for all your positions instead of just buying the stock outright. Say you wanted to buy Nvidia, but it's at 129.84 like it is now. You're like, I want to buy this at a discount based off of my technical analysis that I'm doing. I'd rather own it at 120. Well, just keep selling these put options at 120. You're going to get $400 every time. And the more it goes out of the money, meaning the more the stock goes up in price, the more underlying option is going to go down in price. So this, like I said, for mine, I was given $400 for 10, and now it's worth 255. So if it goes all the way to, 2 cent, 1 cent, and a lot of theta decay will depend on that. So basically, as you get closer to expiration, and the more it's that contract's actually out of the money, that price will keep continuously go down. So if it goes down to 10 cent, you can just buy that contract back for 10 cent and then sell another cash secure put. So say that happens 21 February, you can just restart that option contract all over again, maybe choose a different strike price, maybe further in the money or further out of the money, depending on the delta. Like I said, I always pick around point 2 and lower. You get a good premium for that and a good discount as well. Thank you everyone for tagging along on this video of Nvidia and cash secure puts. Please let me know if you have any questions in the comments. Like and subscribe if you find this video useful at all. I will be following up next weekend on this position and any other positions that you guys might be interested in. Thanks.